Good morning, Bookmap community. Welcome to the Monday morning live stream. My name is Charles. I'm from a community called Piratetraders, where we are focused on the ES, that is the S&P 500, the NQ, that is the NASDAQ 100, and how they move through the two-way auction process. Thank you so much for joining me here today. All right, well, what do we have happening in the market? We're set up for a very interesting day today with the move that the market made at the end of the week last week. So I think for just a moment, what we should do is zoom out and take a look at what happened last week to give us some context of what might be happening. So I'm going to start with the larger time frame charts. I'm going to start with the daily, the weekly, and the monthly. Let's jump out to the monthly. Why are we looking at the monthly? Charles, you're a day trader. Why do you care about the monthly chart? Well, if something is going to change over a longer period of time, we're going to see those changes happen on a day-to-day time frame, and we're going to be seeing those pivot points that are very important intraday. Okay, so by zooming all the way out on a monthly time frame, we give ourselves some context to understand what's happening intraday. So first things first, what's jumping out to me about the monthly chart? Well, for one thing, we have momentum on the monthly chart. We are making higher highs and higher lows for the last few months. That is a sign that the market on a bigger time frame, over the next few months, still has momentum and can continue higher. However, we have a very large wick forming. So that is a sign that the momentum might be running out, that the market might be looking to roll over on a longer time frame. Now, there's nothing to do with that information yet. I'm just going to put that in the back of my mind and bring it up later on. Okay, we could be getting a continuation of the momentum on the monthly, or the market might be ready to roll over. It has not rolled over yet. Now let's zoom in and we will take a look at the weekly time frame. So on the weekly time frame, we can see the market is in sort of a channel up and to the right. Okay? That again is a sign of the momentum that we're seeing on the monthly time frame. We can also see on the weekly that the momentum has completely run out, because last week we had an engulfing candle that completely engulfed the previous week's range, and it closed below the previous week's low. So that tells us the momentum up on the week-to-week time frame is definitely over. Okay? So what does that tell us carrying forward? Well, it tells us one of two things. Either we need a larger pullback on the weekly time frame. We need to come back and test previous balance around, 5,400, 5,300 area, or we're going to go sideways this week and try to get back up to all-time highs. Okay, so essentially on a weekly time frame, are we going sideways up here, or do we need that larger pullback with price? That's the next thing I'm carrying forward. Okay, so haven't run out of steam yet on the monthly, but could have run out of steam on the weekly, but we don't know if that pullback last week was all we needed. Okay, now let's carry that forward to the daily. So then we take a look at the daily chart and we start to see not only did the momentum to the upside run out, but we have started to create momentum to the downside. We now have a trend down on the day-to-day time frame. The last 3 days, the market made lower highs and lower lows each day. That is very bearish to see. Okay, so the other two charts, the first one is telling us momentum is still up, but could potentially be rolling over. The second one is telling us the momentum up is over, and we're either going to go sideways or pull back with price. This third one is saying we actually have momentum down, and are we going to continue that momentum, go sideways at lower prices, or reverse back up? Okay, so this is giving us a context. I know that might seem confusing because they're all kind of saying different things. But depending on what happens with the shortest time frame, so depending on what happens intraday today, that will tell us what's happening on the daily time frame. Okay? What happens on the daily time frame will tell us what's happening on the weekly time frame. And what's happening on the weekly time frame will give us an insight as to what is likely to happen on the monthly time frame. And so once we know intraday was happening today, we can make decisions about where the market is likely to go over the next few days. Once we know where the market's going to go over the next few days, we can figure out where it's going to go over the next few weeks, which can tell us where it's likely to go over the next month. And all of those insights can be carried forward intraday as we're deciding both directionally, which direction do we want to look for trades, and also just momentum-wise, can this thing keep going? If I'm in a long trade and the market is moving higher, is it going to randomly run out of steam and start pulling down, or vice versa? By understanding the larger context, we can make sense of it. Okay, so now we know what's happening on the daily time frame. We have a trend down, which means either we keep going down, we start going sideways at lower prices, or the market flips and reverses and starts coming back up. The highest probability being continuation lower. Okay, let's see intraday, what we're going to be looking for throughout the day today. What are the levels that matter to us, that are jumping out at us, that we want to do business and think about things? Give me just 1 second to clear out some of the stuff from last week. Okay, there we go. Okay. So something very, very important happened at the end of the week last week. So on the daily time frame, we were just talking about the trend lower highs and lower lows for 3 days in a row. That is a sign the market has momentum to the downside. Okay. It has a trend lower. But whenever the market has momentum, if you study the auction process and you understand what momentum is, you're always asking yourself, when is this momentum going to run out? Because the market doesn't go straight in one direction forever. There is always a point where you run out of sellers that will keep pushing that market lower. Okay? And so we're asking ourselves, if that were to happen, where would it likely happen? Well, if you were a member of the brigade, last week we were talking about this. Once we broke the low on this day right here from the previous day's low, the target instantly became 55.70. Okay? Why? Because that was a previous balance area. So let me just zoom over here. You can see that a few weeks ago, we spent a lot of time, this is the better part of almost 2 weeks worth of trading days, going sideways inside this range right here. We call that a balance area. It's an area where the market is just balancing. It's not going up or down. It's going both ways. It's going sideways. Okay. So we also had a balance area up at the upper end of the range. When that broke and we started that momentum lower, we knew this was the target. This is where the market is likely to go. And so within 2 days, that's where it was. Let's zoom back over here. And you can see within 2 days of us breaking out of this previous balance area, we were right back in the one before. Okay? That's very important to understand, because if we're asking ourselves the question, where is the market likely to run out of steam to the downside? Guess where it is? The previous balance area high. That's where the market is likely to bring in buyers and either start going sideways, grinding around on the balance area high for however long it needs to, or turn around and start heading right back up to those all-time highs once again. We reached that level. So as we're opening this morning, the question we're asking ourselves very simplistically is, are we above or below that level? Now we've still got, 20 minutes till the market opens, but I think it's pretty safe to say we're going to open above that level. That is neutral to bullish to see. Before the opening bell even rings, I can tell you the two higher probabilities for today is that the market will either go sideways inside yesterday's range, inside Friday's range, okay? Or it will turn around and head for Friday's high and start making higher highs on the daily time frame. One of those two is the more likely scenario. Now, does that mean we can't just continue lower and keep the trend going on the daily? Of course not. We absolutely can. I'm not discounting that scenario could take place. But to me, it is just less likely that will take place because we're opening above this balance area high. You can see from when we got in here on Friday, we just played tug of war, tug of war, tug of war, tug of war, and then all weekend long, tug of war, tug of war, tug of war, tug of war. And so far, when the opening bell rings in about 15 minutes, the buyers are winning. So that means anyone who was selling on Friday in the second half of the day, anyone who was selling in the overnight all weekend long, they are all short in the hole. And what that basically means, being short in the hole, is when that opening bell rings, they're all going to be starting to panic. They're all going to be feeling less comfortable being short because the momentum isn't still going. And so that increases the odds that they will cover those shorts, which increases the odds we go sideways or higher today. Okay, so that is why that happens that way. All right, so let's play out these scenarios. We've got 3 scenarios that could happen intraday today. 1, we grind around inside Friday's range and go nowhere. 2, we break Friday's high and start to make new highs on the daily. 3, we break Friday's low and we continue the momentum lower. So what will happen carrying forward based on, we talked about the daily context, what will happen with all 3 of those? Well, if the market goes sideways today inside yesterday's range, it will be an extremely frustrating day. There will be lots of random reversals. It will be very choppy, very difficult to read, and likely we will get a spike at the end of the day. So I would say within the last hour or so of the day, the market will either break higher or lower, and that will tell us where the market is likely to go over the days ahead. So that's the sideways inside Friday's range scenario. Let's say we find support in here today, and we turn around and we make a new higher high above Friday's high. Well, that tells us the momentum down on the daily time frame is officially over. If the momentum down on the daily time frame is officially over, that tells us on the weekly it's a higher probability we're balancing, which means on a weekly it's a higher probability that we're heading up to the all-time highs once again. That tells us on the monthly time frame we still have momentum. And this thing could keep going higher for months and months and months from now, for all we know. Okay? Now, if that third scenario happens, if the market pulls into that balance area high, goes sideways for a while, and then it breaks lower, and it makes a new lower low, well, that tells us we still have momentum on the daily. Our first target to the downside is the balance area low, the previous balance area low at 55.13. And that we must monitor for continuation to get there. That's it. It's as simple as that. We make a new low, we're going to 55.13. I have no doubt in my mind. Not necessarily today, although probably today. Okay? And that also tells us on the weekly time frame, the pullback isn't over. We're still pulling back. And that tells us on the monthly time frame, there's a slightly higher probability that the market is rolling over on the monthly. Okay? So I have a feeling today is going to spend some time chopping around 55.70, but whichever way it breaks will give us some things to carry forward throughout the rest of the week. Any questions from the chat? Just an FYI, starting now, you've got to subscribe to Bookmap's Discord in order to be able to comment on YouTube. So there is a link in the comments there from Bookmap. If you could jump in, subscribe to their Discord, and then you'll be able to hang out and ask questions with me. Good morning to Griff, who can trade. Welcome to you. Bill K in the house. Good morning to you. Will is here. 777 Athletic. Good to see you. He says, Charles, always late. Bro, I was like 1 minute late today. Uno momento. Jen is here. Jay is here. Good morning to you. And Michael, welcome, welcome. Please smash that like button, that thumbs up button. We got 55 people hanging out, but only 20 likes. A lot of haters out there. A lot of haters. Hating. And say hello in the Discord. Steffi, good morning to you. 12 minutes till market open. Any questions for Charles? Truman. Why, thank you. You're going to make me blush. Good morning, Frito. All right, let's jump over and take a look at the NASDAQ. Talking about the Q. Okay, I'm just going to jump out actually real quick and do the top down on the NASDAQ as well. Just for my own context. Okay. So it's very similar to the ES, but I would say it like this. I would say if the markets have found support, if Friday was the support and they're going to turn around and they're going to start heading to all-time highs once again, the NQ is actually a step ahead of the ES. So the ES, what we talked about is that we have this previous balance area in here. We tested it last week. So if we get a lower low today, we're likely heading to that balance area low. That's very, very common. When you re-enter a previous balance, you either immediately bounce up out of there or you go to the opposite end. I mean, that's how the market does what it does, okay? So either we get that bounce today or we are going to the opposite end. Well, the NQ already did it. They did it last week. They had this balance area over here, and they came straight through already, making their Friday's range an actual look below and fail of that balance area low. So that means the probability that the NQ is going to go higher today and make a higher high is actually much higher than the ES, where it's kind of random. It could or it might not. The NQ has a good probability of the momentum to the downside being over, that it probably had enough of a pullback. There are buyers to buy this dip. So that is a little more bullish to see than the ES, but I would describe both as in the exact same scenario. Scenario 1, sideways inside the previous day's range. Scenario 2, higher high leads to momentum up. Scenario 3, lower low leads to much larger momentum to the downside. Okay. So I'm looking at the NQ and I'm saying if they break Friday's low at 19,650, we'll call it 57, they are likely heading to the next large node, cumulative node of volume. Okay. That's going to be right here at 19 for 500. Yep. So 19,500. That is a target to the downside if the Q makes a lower low. If the Q makes a higher high, the first stop is 20,012. The second stop is 20,184. And it can likely test both of those today if we make a higher high above Friday's high, which is at 19,978. And we are right up against it. So just once again, I want to go back to describe an auction process, right? An auction process is about emotion, right? People are emotional. They make bad decisions when they're feeling emotions. Those emotions can't be trusted. Imagine being anyone who sold the second half of Thursday on the NQ, Thursday night on the NQ, anytime yesterday, or anytime over the weekend. Every single one of these sellers is selling in the hole, which means if the market opens and it pokes above Friday's high on the NQ, all these traders are going to be emotional. What do emotional traders do? They just exit. They just want to make the pain go away and they just get out of their trade. How do they do that? At market. Okay? So there are stops, just hard stops sitting above Friday's high. That would be the first wave of shorts that would get taken out. And then likely there would be more short covering. So I think if we can make a higher high, making it to 2184 is a very high probability. Because you got a lot of traders that are short right now, the Q. And every single one of them will get emotional if the market gets above Friday's high. So what's it going to be? Q, sideways inside Friday's range, new high or new low? You tell us, and then we'll know what comes next. Tony says, anyone find patterns with the backtest bots? They seem to randomly turn off even with no news scheduled. Bracket bots. Yes, the bracket bots. What an annoying thing. There was twice on Friday where they turned off the bracket bots and it instantly became so much easier to read the order flow. It was like, it was like like when you've got like a nagging pain and suddenly the pain is just gone and there's like such a sense of relief. That's what it felt like. It felt like when you have water stuck in your ear and you shake just right and the water disappears and you're like, it feels so good. That's what I felt twice on Friday when those bracket bots disappeared. And you're right. They just disappeared again about, 10 minutes ago. But I have a feeling that they are the new normal and somebody's just tweaking things. They're just tweaking the algorithm. Beep, boop, beep, boop, beep, boop. And they'll turn them back on at any moment. But I must admit, when I opened my chart this morning and I saw that they were there, I was deeply disappointed. And that's, of course, referring to these little sections of liquidity directly above and below price. That's been there for a few weeks now, and it just always stays with price. So it serves no purpose whatsoever. Those orders never fill. They are just there to distract traders who try to read the order book from being able to understand what's happening. Knowledge Seeker says, hi, is there any sign up for trials before committing to a lifetime membership? You don't have to sign up for a lifetime membership. You can sign up for monthly. And you really have to go through the effort of signing up for at least a month because you got to get your data linked and all of that type of stuff. So it's like, if you're going to do it, you should give yourself a month to experiment with the software, get more comfortable, find out if it can really help you. You know, a 1 week trial, nobody is going to become an expert in a piece of software in a week to where it can actually really help you. The first week is always just going to be experimentation anyway. So I would say if it's interesting to you and you want to try it, just commit to a month. Pay for 1 month and find out if you find value in it. John says, more beep-boops. Beep-boop, beep-boop, beep-beep. Tony says SPX options don't trade between 9:15, 9:30. Just wondering if those are the option sellers brackets. Could be. Whoever it is has sophisticated computers. That's the only thing I can tell you. Because you would assume that every now and again, particularly when there's a sweep of the order books, the market would get up there and tag one of those, at least for a second. And it never does. Even sweeping the order books, those move with price. So whoever it is has deep, deep pockets. And lightning fast computers that are directly linked to the CME, without a doubt. I'm talking about in the same building as CME servers. Jen says the visual aspect of the orders was a game changer for me. Bookmap. Yeah, so that for me too. I always thought order flow was a waste of time because there's so much spoofing, right? There's so many fake orders in the order books. But I have learned that it is very, very valuable just to particularly see two things: where the large nodes are of liquidity in the market, just because they're targets for price, and how they change. Because even if you don't know exactly what's going on, when you see a change, you know something is going on. And so it kind of prepares your mind to be open to like, okay, the market's been trending and we had tons of liquidity above, but all that liquidity just disappeared. What's probably going to happen next? We're probably going to start rotating, stuff like that. It's a very good insight. There's a little more information to work with. Okay, so the market is open. We opened right near that overnight high. So once again, that means shorts from the overnight all weekend long and from Friday are feeling a little pressure right now. I'm expecting that we're going to chop around between 55.96 and 55.66. Okay, in this area here. And whichever way it breaks, we are likely to get momentum to the previous day's high or low. So if we break 96, we're likely to test 56.05. If we break, we'll say 63, we're likely to test 55.42. In the middle, it's just going to diddle. For those that are just tuning in, there's lots of people that just show up right when that opening bell rings. First off, let me say welcome. Good to see you. Say hello in the chat. Secondly, let me tell you what my scenarios are for today. Even though everyone else already heard them, I'll give it to you one more time. So I think we are likely to chop around. We could go sideways all day long. We cannot discount that as a possibility. Okay, it's a very real possibility because we are right on a previous balance area high. We could basically do what the overnight did all weekend long and just go sideways, okay, inside Friday's range. So that is a possibility. But I think the higher probability is that we're going to test Friday's high. Getting above there will increase the odds of momentum to the upside. If I'm wrong and we head down to test Friday's low, I'm looking for a very large pullback down towards 52.12. Okay, so sideways, if we break higher, move to the upside. If we break lower, move to the downside, but we might go nowhere. And so we have to start with that. So just put yourself in the shoes. Exercise your brain parts for a moment and imagine you're one of those sellers who sold on Friday. You're one of those sellers that sold over the weekend. How are you feeling right now? You're probably wishing and praying and hoping that this market is going to continue to the downside today. What will it take to get you to freak out? Getting above that overnight high. They're going to start to panic. So I'm looking for support and a bounce back up through the opening price to begin the momentum to the upside. If we don't get it, well then, more sideways, more chop, more grind. I see potential support around 55.83 and 55.73. Knowledge says, I am a visual person and reading text is difficult for me. Bookmap is more appealing. I 100% agree. I'm dyslexic, so reading text is particularly difficult for me because I mix all that shit up. I get that shit mixed up. So yeah, no, that's why I love Market Profile in particular, because it takes the information and it turns it into a picture. It turns it into a bell. Right? You can see that there's a bell-shaped curve here. And that just makes it very, very easy with my eyeballs to catch the important levels where the most business happened, you know? To see where is that high? Where is that low? Where are those important levels where things could change? It's very easy to connect with. So I too am visual. It's also why I can't be an algorithmic trader. I couldn't sit in front of spreadsheets all day and study data. It would drive me nuts. Good morning to Nap and Chillin' with Dylan. Good morning to you. Once again, if you guys want to comment today, I would love to hear what you have to say. Questions, comments, concerns, criticisms, hit me in the chat. You do have to follow Bookmap, Bookmap's Discord server to be able to chat. But you should follow the Discord anyway. Lots of cool people hanging out there. All right. We are above the overnight high. So this brings to light what I talked about earlier. Imagine you were short from Friday. Imagine you were short from the weekend. Are you loving life right now? Probably not. So that slightly increases the odds. We're looking to test Friday's high. We haven't gotten any short covering yet. We'll know it's short covering because there'll be fast pops. If we start to see those, we can look to test Friday's high. Oh, there's one. Boop. See it? Ooh, somebody just got scared. Somebody who was short 793 contracts and just stopped out. Okay, so I'm looking at the liquidity just above price here between 5,600 and 5,605. And I'm asking myself, to spoof or not to spoof? That is the question. If that is real sellers that are actually going to short the market there, that should smack the market back through the opening price. But if as the market pushes up there, they disappear, boop, 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 it'll just pass right through. Let's see what happens. Okay, another 271. Another stop from someone large. I'm getting nervous. Sold on Friday. Let's go take a look at the NQ. Bam, there it is, folks. Dun da da dun da da dun da da dun dun da da dun da da dun da da dun dun da dun da dun da dun da da. The bulls are back on the NQ. All right, so the NQ just barely made a new higher high on the daily, just a little tiny bit, little 1 point above the previous day's high. Okay, that's nothing super exciting, right? We still haven't gotten any short covering on the Q. We still haven't squeezed anyone. But that is a sign, making higher highs, that the momentum down is likely over for the NQ. Okay? So that means buyers will start to buy dips. And that will increase the odds that you'll poke back up again, and then you'll get that short covering. On ZQ. Same thing for the ES here. Now I'm looking for support at the overnight high around 55.95 to try to test yesterday's high at 56.05. If they can make a higher high on the Q, there's no reason they can't do it on the ES. Knowledge says, what are the little red dots starting with E? So you got to really zoom in to see it. It might be hard to see here, but when it's two little triangles like that, that's an iceberg. Okay. An iceberg is an order where it is using a machine to hide the size. So what they do is, think about like an iceberg on the water, right? You got like this giant iceberg, but the water line makes it so you can only see what's sticking out at the top and you don't know how big the iceberg is underneath. What they do is they just put one contract in the order book. And then as soon as price touches it, they add another and another and another and another, and they just keep adding it. So price can't move up. It just keeps kind of pounding into that level. And we don't know how many orders they're going to keep adding. We don't know how big the iceberg is. But we just know that one account keeps adding one contract at a time, preventing price from poking through. Okay? So that is what those two little triangles mean. It means that it's an iceberg. And that's a plugin that you can buy for Bookmap. And then this one right here where it's a circle, that stops. That means one single account got stopped out for that big of size. When you see the E next to the iceberg, that means executed. So that means that every contract they wanted to fill there got filled. If you see a C next to it, it means canceled. So it means they started poking up into it, and let's say price had pushed away, and then they pulled that order, it would show a C there saying that it was canceled. And of course, that helps you to understand what's happening because that is likely computers. That's bots doing business. So you can see, are the bots changing whatever they've been doing? If they start canceling icebergs, whatever they were trying to do isn't working and they're going to switch and do something else. And of course, once you get the E executed, it means that's no longer resistance. Price will be able to pass through, which obviously here it did. Okay, so just looking at the liquidity here, it does seem like they are trying to scare price away. You see how it's getting darker and darker? Let me switch colors. Here it's like a little lighter, and then it's starting to get darker. That is the sign that they're trying to add liquidity above to push market away. Buyers are thinking, I don't want to go long because I'm not going to be able to get much for it. There's going to be somebody selling right there. So they are trying to scare price back down through the opening price. Now, that doesn't mean they will succeed, but that's what they're trying to do. So if market pushes down to that overnight high, pushes down to 55.95, and it starts to find support in there, and suddenly this liquidity starts to disappear, guess what market's going to do? Turn right back up and head for it. Let's see what happens. Okay, you can see the iceberg there too. So they piled on this liquidity, trying to scare price away. Price was moving down, and they started adding liquidity. That didn't work. So then they tried to use an iceberg. That isn't working. So I think somebody with size is about to get squeezed if we get above Friday's high. And they were trying to prevent us from making that new high on the daily. But there's too much buying pressure, and they poke through. Dun, dun. All right, we now have a week high on today's high, increasing the odds. We're going to poke above yesterday's high. As I said, that gives us context to carry forward, not just intraday today, but on the weekly, that the momentum is likely to shift to the upside. So remember, this morning we started by zooming out and taking a look at the daily, the monthly, and the weekly. If you look at the weekly chart, there's only one of two things that could be happening, because last week engulfed the previous week and closed lower. We are either going to continue lower this week, or we're going to turn around and head right back up towards last week's high, which is the all-time high. If we poke just one more point higher on the ES and we make that higher high on the daily, that will tell us the higher probability is that we are heading back up for those all-time highs. Let's see what happens. There it is. Ba 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 ba. All right, The bulls are back. Ladies and gentlemen, both markets, ES and Q, have higher highs on the daily. That is a confirmation that the momentum to the downside is over, and the market is likely to either go sideways or higher today. We can now use the overnight high on the ES as the support level to tell us which of those two is happening. If we just look above yesterday's high, pull back down into the overnight range, well, then we're going sideways today. Okay. If we pull back down and we turn this into support, then we are going to start to head up. And the next stop to the upside is 56.22. Let's see which one it's going to do. But this is bullish to see, or anyway, less bearish. Exact same thing for NQ. The opening price is the overnight high. So as long as they stay above there, I expect they'll pull back down and test it for support. If it holds, continuation to the next node at 2184. Remember, we talked about everyone that was short second half of Thursday, Thursday night, Friday, and all weekend long. Every one of these sellers is really nervous right now. That's a lot of traders to squeeze. So if they come back down, they've already squeezed the first set. If they come back down and find support, we'll be up at 2184 in no time as we squeeze last week's sellers on the Q. It's important to note there is nothing more bullish than the potent combination of short covering and new buying. It's strong, y'all. It's strong. Let's see if that's what we get. Looking for a pullback into support, looking to see if they can hold it. Hello, Percy. Welcome. If you have not smashed the like button, please do so. We got 118 people hanging out, but only 40 likes. So I'm just forced to assume that you all hate me. You don't want me to feel good about myself. Please smash that thumbs up button. We got a question here from Neri. What do the green arrows with the numbers next to them represent? That is when the order book gets swept. That's just the number of contracts that they took out with a sweep. A sweep of the order books is basically just where there's a bunch of limit orders sitting in the order books, and they just come through and all at once they take them all out. It measures it by the number of contracts taken out and the number of levels taken out over like a few seconds or whatever. So each one of those is like they took out, a bunch of contracts there. They took out a bunch of contracts there all at once. That is something that you often see either when the market has crazy momentum. So let's say the market just had tons of momentum to the upside. It's just chugging along. You will see lots of sweeps at every high. They'll just keep sweeping and sweeping and sweeping. It is also something you can see right before a reversal, which is what happened here. So they wanted to get to yesterday's high to make that higher high. They swept through the order book to make it happen. Whoosh! They forced their way through. Now they can squeeze all the sellers from the last 2 days, right? So here's the pullback into support. If it holds, every one of those sellers is forced to give up. So I'm going to make it as simple as this. Both markets, opening price, as long as they stay above it, as long as we continue to bring in new buyers above today's opening price, that is what I talked about with the combination of shorts covering, squeezing the sellers from last week, and new buyers stepping in, right? That's the most potent, most bullish thing you can see in a market, is that combination of squeezing old business and bringing in new business. So as long as we stay above the opening price for both markets, that's what's happening. We're squeezing those old sellers and we're bringing in new buyers. So as long as we keep doing that, we should expect the market will continue to go higher and higher throughout the day. If the market pulls back down below the opening price, well, then it was just making a higher high to signal that the market isn't going to keep going down. But intraday today, we will probably just go sideways inside Friday's range. Okay, so that opening price / overnight high is going to need to hold as support to keep me bullish this morning. But I, as of now, am bullish as can be. Ships in the house. Good morning to you. Welcome. Still only 40 likes. All right, guys. I get it. I got to stop using a camera. I can't let you guys see my face. Tom Gunn, thank you. Arr. All right, here we go. Pulling into support. We got support at the halfback, 55.97, and the overnight high, 55.95. As I said, a bounce there is new buyers, which is bullish. Willie T says, I haven't heard any opera in a while. Maybe that's that's why on the likes. I don't know. I feel like the opposite is true. I feel like the less opera, the more likes. All right, here we go. Looking for support. Can they hold it? Nope. All right, guys, the pass through the opening price means we got to go sideways first. So remember, the higher high is always a signal that the momentum down is over on the daily. You don't want to be shorting the market when the momentum is over to the downside, okay? But they're not ready to continue higher just yet. So we need to spend some more time going sideways inside Friday's range. So support right here at 87, and then 84 for a bounce. And so you say to me, well, Charles, If you know we're going sideways inside Friday's range, what's wrong with shorting? Because anywhere in here could be the bounce to create that momentum up. We don't know where those buyers will be waiting. So I'd rather be buying dips than selling, hoping the market's going to keep dipping. And that is purely because we made that higher high on the daily time frame. The next question we'll be asking ourselves is this little node right here around 5,600, does that become support, right? They'll buy a dip, they'll head back up. Become resistance. They'll head back up into it. If that becomes resistance, that is a second sign we're going sideways inside yesterday's range. If it pokes through and it's not resistance, momentum up. DK says, so new buyers means bullish, even though the buyers can dip deeper and deeper for support? Yes. So the idea is, as an intraday trader, if I'm looking to trade the market over the next few hours, right? This morning, I was asking myself, what's going to happen today, right? Is the market just going to go sideways all day? Are we going to make a higher high or are we going to make a higher low? That in the beginning, it's just a question of what's going to happen before I even understand what the probabilities are, right? Well, now we know what the probabilities are. Because we made that higher high, we know the probabilities are we're going sideways inside yesterday's range or higher, not lower. The odds of us making a lower low than Friday now are like significantly less. I would say 10% chance that we make lower lows, 90% chance we either go sideways or go higher. Okay. So now I'm taking that into context as an intraday trader looking for trades over the next few hours. I'm saying to myself, there's a 90% chance we're either going sideways or higher, and a 10% chance we're making new lows going lower. Do I want to be a seller? Right? Or do I want to be a buyer in that scenario? Right? And so this is where each person has to kind of decide for themselves, what is your approach? Now, there's several ways you could do it. You could buy every little dip, right? Every time you see a potential support level, you buy. But if you're going to do it like that, because it could keep dipping, as soon as you get a bounce and you're in profits, you want to move your your stop above your entry, right? So it's like it fills, it bounces for a second, boom, move your stop above. If it comes back down and stops you out, you're at the next level. It comes in, you get filled, it starts to move up like it is right now, stop above your entry. If it comes through and it stops you out, you're entering at the next one, right? You just buy every dip and you just hope that when the one finally holds and you head back up to the highs, you'll be in the trade. Or alternatively, you could say, well, I don't know how far it's going to dip, so I'm not going to short, right? Because I don't have a target to the downside. So instead, I'll just wait until the market has definitely found support, and then I'll look to long the market. If I were that trader, I would have to wait for it to get back above the overnight high. So I would need to just let it move now, however far it's going to go. Let's say it dips to right here. Boop. And then it turns around and comes back up. I would see it get above that overnight high again. I would see that there's no resistance here because this could become resistance to smack the market down. And then I'd look to be a buyer up here, right? So then I buy that dip at the overnight high for the next move. Now, if I choose to do that, it's going to be way less effort, right? If I choose to wait for confirmation at this point that we've made a low and then I buy support, well, it's going to be a lot easier. I can just sit back, relax, let the market chop sideways inside the overnight range and just kind of wait until my opportunity comes. But my reward is much less, right? Whereas if I'm willing to buy dips along the way and move my stop very quickly because it could keep dipping and I don't want to be in a trade going against me, right? So if I'm willing to do the work of entering, moving my stop, entering, moving my stop, if I'm willing to play that game, I'll catch a bigger move whenever the market eventually makes the move. So it doesn't matter what type of trader you are, whether you're looking for those quick trades or you're looking to wait for the trade to come to you and you're just taking your time. It doesn't matter what you are. In both scenarios, you don't want to be a seller because you don't know how far down it's going to go. And if you can't have a target to the downside, why enter the trade? That's just the way I do it. That's just my approach to markets. That's the way I see it. And with that, unfortunately, I must say goodbye. Au revoir, farewell to you and you and you. I wish you all the best. We will see you here next Monday morning. If you're a member of the brigade, if you went to piratetraders.io/join and you paid the $10 a month that it costs, head on over to the private stream and we'll hang out there. If not, we'll see you next Monday. So I am still of the opinion that this market is going sideways today or higher, not making new lows, but it does look like this dip wasn't enough. So the next target to the downside is 75. Okay. Good luck. Happy trading. We'll see you next time.